Hey guys, welcome back. This is a continuation from the last video. If you missed those, click the links down below. But in this video, I'll go over each of the expenses line items as it applies to me as a freelance photographer. Also, don't forget to consult your tax professional before you submit any official tax filings. So with that, let's get into it. Line 18, office expense, and this kind of relates to line 22. These are two big categories that most of my expenses fall under. And it could get a little confusing because if you go to the instructions for line 18, it says, include on this line expenses for your office supplies and postage, which is confusing because it says expenses for office supplies, but then you go to line 22, which is supplies. Line 22, it says you can deduct the cost of books, professional instruments, equipment, if you normally use them within a year, but I mean, just the general category, it says supplies, but under office expense, it says expenses for office supplies. So it's very confusing. I'm still not 100% sure. A lot of research has kind of given me a fairly good idea of how to distinguish between the two. A general distinction between line 22 office supply versus line 18 office expense. For line 22 office supply, I kind of categorize it as things that are not directly related to running your business. For example, toilet paper, if you can find any right now. If you have an office bathroom, the supplies that you would put in there, cleaning supplies, if you have a coffee machine in your office, the coffees, the beverages, the office snacks, papers, pens, things like that, I would generally put in the office supply line 22. Line 18, office expense, it's also called office operating expense. So these are expenses that relate directly to running your business. So for example, Adobe Creative Cloud, I have a subscription to that. So those fees fall under line 18 office expense. If you had Dropbox fees or if you had Google services fees, if you pay for licensing fees for music, for example, to put into your videos, like Artlist, those fees would fall under office expense. So these are expenses relating directly to making your business run. So toilet paper, while it is important, it's not related directly to running your business, but we all know it's important. Also under line 18, I put a lot of expenses that relate directly to photo shoots as well, or video shoots. If I have on-set catering where I provide meals and crafty and whatnot for my crew, then that food wouldn't be under the deductible meals and entertainment. It would relate directly to a production. And so that would be under office expense for me, where I could deduct 100% of the cost of the food. If you have a business meal with a prospective client or a current client or whatever, and you take them out to a meal, that's more kind of like wining and dining, so to speak. And so that isn't related directly to a production shoot or whatever. Those meals are only 50% deductible. So if you spent, say, $50 on a meal, you can only deduct half of the cost of that meal, not the entire amount. But again, clothing, props, meals, crafty, snacks that relate directly to a photo shoot or a video shoot or whatever, to me fall under office expense because it helps me run the actual business part of the business. I know that isn't fully clear if this is the first time you've heard of the difference between office expense and office supply. It takes a while. It takes a lot of reading to kind of fully get a sense of what falls under what category. Keep on Googling, look on Google, just type in office expense versus office supplies, and just read a bunch of these different posts that kind of talk about the differences. One link will say one thing and kind of talk somewhat specific about certain things, certain industries, and another link will talk about other stuff. The more you read, the more you get a sense of like, what does it fall under? Is it office supply? Because like sometimes it says, for example, here under the small business, the balance small business, here you think office supply might be just like the quick consumable goods like paper and pens and whatnot. But so this site says, office supply can also be a furniture like a desk. Normally I would have thought a desk, because it's more permanent, might be an expense, but I guess it can also be a supply. So with that, just read as much as you can. Just Google as much as you can to see what the difference is. And the more you read, this is one of those things where it helps because I make so many purchases under these two categories. This is where it helps when before I click that purchase button, I can kind of get an understanding and an idea of what category this would fall under. A couple things to note. Taxis. If you take a taxi for your business, obviously, you might not take taxis. For those of us that live in the city or more crowded areas, we take a lot more Ubers and taxis. Those don't fall under office expense, obviously not a supply. Before, I would put that under an office expense, but I've been told that that should be listed out separately, not in line 18, but down here in part 5 as other expenses. So you would just put taxis in. So you would just write out taxi fares and then you write the amount here. That's one thing that will be separate and not fall under either of these categories. Losing my voice here. Not a good time to be coughing right now. I swear it's just from talking too much, not some other reason. Okay, so line 19, pension and profit sharing plans. Again, I don't have any employees, so I will skip right over that. Line 20, rent or lease of vehicles, machinery, or equipment or other business property. So again, if you have a car that you use for business that you lease, then that lease payment itself would go under 20A. And here you can see in the instructions it says if you rented or lease a vehicle, machine or equipment, enter in line 20A, the business portion of your rental costs. And I don't lease a car and I don't know the specifics of it. So it says leasing a car, chapter 4 of publication 463. If you lease a car, go ahead and check that out. For the normal operation of my own photo business, video business, I do rent vehicles sometimes. I do have my own car, but sometimes if it's a bigger production, I might rent a van or whatever. I would put that cost under line 20 alpha as well. And then also equipment. I don't own everything that I use for shoots. And so I'll go to some of the rental houses and I'll rent grip equipment, lighting, other lenses and whatnot. I don't own everything that I need. It's just more cost effective to rent. So those rental fees, the rental costs would go under 20 alpha as well. And under 20 Bravo, 20B, it's amounts paid to rent or lease other property such as office space in a building. So I do rent office property or office space, specifically studios. I rent photo studios, I rent video studios, sound studios, and also casting call studios. When we have our casting calls, I'll rent a space for that. And so that all goes under 20B. And then the equipment, the vehicles, the machinery, whatever else that you might rent would go under 20A. Line 21, repairs and maintenance. The instructions say deduct the cost of incidental repairs and maintenance that don't add to the property's value or appreciably prolong its life. Do not deduct your own labor. Do not deduct amounts spent to restore or replace property. Those must be capitalized. So this line is for if you have things that break. For example, if your computer breaks or your camera breaks or your lens breaks and you have to go get it repaired, then you would put those costs under line 21. Let's say you dropped your camera and your lens breaks. If you sent that lens to go get fixed, you would put that cost under line 21. However, if the lens was just beyond repair and you had to get a new lens to replace it, that would not go under line 21. That would go under a different category. So for a lens, it would be a section 179. Also under repairs and maintenance, if you just do general maintenance, get your sensor cleaned at a shop, you could deduct that cost as well, but it says you can't deduct the value of your own labor. So you can't pay yourself to do the maintenance. So it's not really clear. Say you got sensor swabs to clean your own sensor. I guess you could put the swab cost under repairs and maintenance, or it could just be office supply, but you can't charge yourself like $50 or $100 an hour to clean your sensor. That specific situation, like swabs to clean your sensor, your camera sensor, you could put it under line 21, repairs and maintenance, or you could put it under office supply. I don't think it really matters at the end of the day because you could explain it either way and swabs don't really cost that much anyway. So it's up to you. Oftentimes I don't necessarily buy just swabs by itself. I might buy it with a bunch of other stuff, just lump it all into office supplies just to keep it simple. Potato, potato. Okay, so that's line 21. Line 22 we covered earlier. Line 23, taxes and licenses. It doesn't really apply to my business, so I tend to kind of skip over it. Definitely read if this applies to you or not. Line 24, travel and meals. This can get a little bit tricky as well. As photographers and content creators, we tend to travel a lot, right? So line 24, travel, it relates to travel away from your business home. I live in New York. So if it's just local travel where I go there for the day and then I come back, it doesn't fall under this. But if I stay somewhere overnight, even if it's close, for example, like Philadelphia, it's only a couple hours away. If I stayed there, say it's a multi-day shoot or whatever, then those expenses would fall under line 24 travel. Also, if you stay anywhere for longer than a year, then that would fall under something else. But this is less than a year, but more than 1 day. So this is for hotels, Airbnbs, if you rent a car. Also a little bit tricky, but gas. If I travel to, say, California and I rent a car and I pay the gas, this gas would be deductible as a travel expense. But when I'm here at home and I drive my own car and I pay for gas, because I use the standard mileage deduction of 58 cents a mile, I can't deduct the actual gas cost. But if I'm in California or I'm anywhere else and I rent a car and I'm specifically traveling more than 1 night, then that gas receipt, I could deduct the cost of that gas. Also, if you happen to travel with your spouse who is not necessarily part of your business, they just wanted to tag along for fun, then you can only deduct your airfare, your part of the hotel. Say you get a hotel, you can only deduct half the cost of that if it's just the two of you, things like that. So it's only related to you and your business and whatever else is related to the business. But your spouse could definitely tag along. It's just their portion. If they're not related to the business itself, if there's no business purpose for it, then their portion would not be included in line 24. It says do not include meals on this line. That's going to be in line 24B. Don't include entertainment expenses on this line as well. You can also deduct incidental expenses, fees and, for example, fees and tips to porters, baggage carriers, bellhops, hotel maids, stewards. The standard deduction, if you don't want to keep track of it, is only $5 a day, which seems very cheap to tip all these people if you're staying at a hotel. I thought this was funny. The incidental expenses, they don't include expenses for laundry, cleaning, pressing clothing, lodging taxes, or the cost of telegrams. That's funny. You cannot use this method of the standard $5 incidental deduction if you use the standard meal allowance for line 24B. And so let's go to line 24B. So A is directly relating to travel. B is for the meals itself. So this is meals while you're traveling and also meals that you use to basically wine and dine your clients or when you're having a meal while you have a business meeting. And these meals are 50% deductible. And it says in most cases, the percentage that you can deduct from these meals is only 50%. And these are the conditions that need to be met if you are going to deduct these business meals. So these meals are also while you're staying in your hometown. So if I go out to New York and I have a business meeting over a meal, then that would be 50% deductible. But when you're traveling, there's 2 different ways you can do travel deductions for your meal. So you could deduct the actual cost of your meals that you actually pay for, where you have to save the receipts and keep track of everything. Or you could keep it simple and do the standard meal allowance. And that's this right here. So it says, instead of deducting the actual cost of your meals while traveling from home, you can use the standard meal allowance for your daily meals and incidental expenses. Under this method, you can deduct a specified amount depending on where you travel instead of keeping record of your actual expenses. However, you must still keep of records to prove the time, place, and business purpose of your travel. So definitely you have to keep your receipts and whatnot, but you can basically calculate how much you can deduct by going to this website here. It's basically called Per Diem. And you can also Google Publication 463 to figure out the deduction using the standard meal allowance, including special rules for partial days of travel. So actually, let's go ahead and search for Publication 463. Let's look down on the left side. What travel expenses are deductible? That's for us, meals and standard meal allowance. So let's go there. So here, under the standard meal allowance, you can deduct 50% of the actual or the standard allowance. So whatever the allowance that you get, you can only deduct 50% of that. And if you scroll further down, here we go. Travel days for your depart and return. You can claim 3/4 of the standard meal allowance rate, or you can prorate using a method that consistently apply and is accordance with reasonable business practice. So that kind of leaves it a little bit open, as long as you can reasonably explain what method you use. But for simplicity, I just use the 3/4 or 75% of the standard meal allowance. So whatever the standard meal allowance is for the location you're going to, you can only deduct 75% of the first day you travel there and the last day you travel back. And then the rest of the days in between, you can deduct the full amount of the standard meal allowance at half the rate. That's a little confusing. Let's go back. We're going to go to this GSA website to figure out what is the standard meal allowance. So here we are on the GSA website, and it doesn't help that they just send you to the basic homepage. What you're going to do is go up here. We're going to go to travel, per diem rates lookup. This is where you're going to go. And then it takes you to this site, and then let's go ahead and make that bigger. So these are the per diem rates for the continuous US, the 48 states. Make sure you do the tax year of 2019 because we're going to file for 2019. For state, we're going to go to California, and let's say we went to Santa Monica. I'm going to click find rates. And you can see here, it says lodging by month and meals and incidental expenses down here. So I actually use this site for lodging. When I make estimates for jobs, I go to this site to see how much a hotel would cost. And this is what I put in my estimates. If the shoot were in April of 2019, for the estimate that I would have done, I would have quoted $247 per person per night in the city of Santa Monica. But for taxes here, we're going to scroll down to meals and incidental, M&IE. And so say you traveled to Santa Monica for a 1-day shoot. You had 1 day to travel, 1 day to shoot, 1 day to come back. That's 3 days total, right? And so here you can see, this is how to read it. Santa Monica, the meals and incidental expenses total is $76. However, this is for line 24B, which is deductible meals only, not the incidental expenses. So we take 76 minus 5, or if you added all these three, it would add up to $71. So you can deduct $71 per day you're in Santa Monica. However, in this example, because I'm traveling from New York to California, the first and last days of travel, you can only deduct 75% of the meals. And if you click the information, you can see it says 75% for the first and last day of travel. So we do 75% of the meals only, not the total with the incidental, only the meals. So we do 71, not 76, times 0.75. So the first and last days of travel are at $53.25 each. And then the full day of production in the middle is at $71. So for this 3-day trip to Santa Monica, it's travel, shoot, travel. So 2 travel days at $53 times 2. And then you add the middle day at the full rate of $71 is $177.50. That's the total amount of standard meal allowance here. And because it says you can only deduct 50% of that, what you're going to do is divide that by 2. $88.75 is how much you're going to enter into line 24B, not the full $177 amount. And so for all your travel, you're going to want to keep a log of where you travel to, what dates, and then look up the per diem rates on this GSA website. And in another video, I'll show you how you can keep track of your travels and whatnot. Line 25, utilities. This, it says deduct utility expenses only for your trade or business. I don't write off any expenses under this line. Even though I do have utility bills that I do write off, I do it under a different section, under Form 8829, the business use of your home. So for my internet bill, for my electricity bill, I write off a percentage of that, not the entire amount. If, however, I had a separate dedicated studio that I rented out somewhere else in a different building, all the utilities there, electricity, water, internet, that would go under this line 25. So if you have a home office where you do the primary bulk of your business, then you're going to want to fill out Form 8829 and not anything under line 25. Line 26, wages. This is for employees, but all the people I hire out are independent contractors, so I leave this blank. But if you had like a studio manager, for example, a full-time studio manager that you pay under W-2 and not 1099s, then you might fill out this line here. And then line 27, other expenses, it says from line 48. So you'll see in the instructions, there's line 26, but there's no line 27. It goes straight to line 30. It says, this is where you have other expenses, and you'll see from line 48. So if you scroll down on the Schedule C, all the way down to line 48. Part 5, other expenses. This is where you would list basically everything else that doesn't fall under one of the other categories from the previous lines. This is where I would attach Form 4562 for my Section 179 and other things like the taxi expenses. I was told specifically taxi fares, those should go under other expenses. But just remember that you can't write off something twice. So if one thing goes into one category, you can't put it elsewhere as well and double dip on that write-off. But yeah, I hope this shines some light on the expenses portion of your Schedule C of your home business or your photo business. Again, this is meant for just research purposes, just to help you understand more. Always consult your tax professional. But yeah, stay tuned for more. I'll be sharing more information on how I do my taxes and some of the spreadsheets that I use that I created to keep track of everything. Don't forget to hit that thumbs up button for the algorithms. But yeah, I hope we can spend this next few months that we all kind of have to stay isolated and indoors to learn something and make it productive and not just sit around doing nothing the entire time. As for me personally, I'm spending a lot of time basically taking care of our kid. So I'm trying to be as efficient as possible and making the most of my time to push out content. There's a lot that I plan to share, not just how to shoot photos and videos, but also the business and just like this, how I do taxes and whatnot. So anyway, again, be safe. Till next time. See ya.